Welcome back to the second half of the Future Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. Futures still suggesting a bit of a rebound after yesterday's selling. We've got, well, the indices, green arrows across the board. The S&P's hanging out just below that 5,000 level. I've got them at 49.93. They're up about 0.4%. I want to bring in Bill Baruch. He's the president of Blue Line Futures. He's joining us this morning to take a look at commodities. Bill, good morning to you. Interesting to see crude yesterday higher with the broader market lower. It was really shrugging off some of those inflation concerns that weighed on stocks.
Yeah, the crude oil has been in a nice uptrend the last couple of days and is back at the top end of the range. Yeah, it really did shake things off. Obviously, the EIA report coming up today. See how that impacts things. But a lot of these economic releases, crude oil has been able to sort of act on its own. Maybe not CPI inflation so much, but if you look at a number like retail sales coming up, if that comes in hot, we could see again rates rise, stocks sell off, metals sell off, but crude should actually bring a bullish tailwind to crude. So yeah, we look at it from that perspective.
Not only some of the economic data, but one could argue it's had a very level-headed approach towards some of the geopolitical events that are playing out. I saw some comments from OPEC yesterday, possibly supporting the market here, talking about positive trends for economic growth expected to extend into the first half of 2024. Global economic growth, they said, remains robust. They said further upside potential could materialize in all major OECD and non-OECD economies. Kind of a rosy picture here, again, tying into some of that strong economic data, the economic figures we've been seeing recently.
Absolutely, and that does align with our views. We are more upbeat on the economy. We've been here in the U.S., the no landing, soft landing camp, if you will. But when it comes to the global economy, yeah, China's had its issues, but we've been, somewhat patient with how China could turn a corner here. We do expect coming out of this holiday this week, this New Year holiday, that we could see some more measures introduced by the People's Bank of China and regulators there that could continue to bring some tailwinds. But globally, we don't see it in absolutely deteriorating conditions, and I think that's really what OPEC's hitting on, and we agree with that. I think overall, geopolitical risks are really underpinning some of the strength too, so that's something there. But when we take a step back, we do have to remember that this is an election year, and so I do see that being a headwind as the year unfolds. But to that, we've seen record production here in the U.S. Not something that the White House is really writing home about and bragging about because of their overall stance. But that overall is a headwind to any sustained rally at the moment. Though we remain bullish on crude. We've had some positions in our CTA, a commodity trading advisor, that give us long exposure in crude oil. We have an energy fund that is more of statistical arbitrage. But we overall have a bullish view here for now in crude oil.
Bill, I really like the word used to describe investors and their approach towards the developments as of recent. You said they've been very patient, right? We've been kind of describing it as the market participants focusing on the positive and kind of discounting the negative, crude prices being one of those negatives, right? The rally we've seen recently to $80, but sort of focusing on the positive in terms of that run-up we saw in crude. Maybe it was the OPEC mention of stronger economic growth, but also they talked about how oil production fell 350,000 barrels per day in January, and as voluntary output cuts from OPEC Plus Alliance in the first quarter took effect here. But also, as I look at that, we saw a strong dollar yesterday as well, right? A big move up there. And that sent gold sharply lower down to 1988, back above 2,000 here right now. But just another one of those commodities, I'm sure it's on your radar in terms of a very volatile environment and reaction to yesterday's news.
Yeah, it's certainly on my radar. Not fun for somebody running a metals fund, in sort of dealing with that type of pressure in the market. But, listen here, gold broke below a big floor that was developing in 2023. That's roughly also previous lows, but aligns with the 200-day moving average in the April contract. We battled and responded out above that support in recent sessions prior to yesterday. So when slicing through that, we also had support at 2016, which was the December Fed reversal where it settled. It settles before the Fed announcement on those days. So that was a big support. It just sliced right through all of that. Now it's battling at $2,000. My fear here is if we don't close the week or have any sort of catalyst that really rebounds this, we're going to find it back in the 1980, 1985 area. So overall, what I'm just managing positions. We have an enormous amount of puts covering some core futures positions. We've tapered those back as support was breaking yesterday too. So just kind of battling, because we ultimately believe gold is in an uptrend. And yeah, there was the blow off top early last year, and then sort of markets now coming back into the Fed's what the Fed believes their monetary policy path is going to be this year. So the market's pulling those rate cut expectations back. So, overall, I'm very upbeat on gold in the sense that once we start to see those cuts introduced, whether that's, I don't think March is on the table anymore. I still think May is the move. But even if it takes as long as June, it's usually gold typically trades 6% higher in the 30 days following the first Fed cut.
Bill, talk to us a little bit about Bitcoin. We touched on it earlier in the show. I'd imagine it's another product that's on your radar here. With the recent rally, we've seen that risk-on tone, a similar environment as far as what we've seen across the board with stocks.
Yeah, you're seeing 50,000. It's been a big move, and overall, as a lot of demand for these ETF products. But I think really the way to really get terrific access to Bitcoin is, our team here and headed by our chief market strategist, Philip Strebel, who joins your show often, works with clients on these Bitcoin futures. There's micro Bitcoin futures, micro Ether futures too. It's just really a great way to be accessing the market. Even as somebody thought maybe, we could have had a buy the rumor, sell the news. That's what sort of my thought was as we went into the launch of these ETF products.
And we did in some ways.
Yeah, there was liquid head and shoulders, and it's resilience, such resilience here in the way Bitcoin has traded, and back at the 50,000, it could be extending those gains further.
Yeah, definitely. I like the reminder in terms of the micro Bitcoin products. I'd forgotten about that. A good access point for someone looking to voice their opinion without necessarily the tick for tick risk associated with the larger size contract. And I think that chart here that we just looked at, the rally, the breakout recently to, well, overnight, it looks like up to 52,130. Another example of how investors have been very, very patient in many ways. Bill, go ahead.
It is a pure play. That's what you really think it is. It's a pure play at a trusted exchange, and using those micro products is really terrific.
I like that. Any other products on your radar, commodities that we haven't touched on?
Copper, it's trying to bottom out a bit here. I think, if we come out of this Chinese holiday and we do start to see a little more measures and lifting that economy, keep copper on your radar. It's really got to stay above 370 though. I don't like it. Yesterday kind of dipped below a little bit overnight. Keep an eye on copper here as the year unfolds. If it can stay above 370, I think we can see a retest back to $4 as the year unfolds. And it's not immediate, but be patient with that.
We have been watching copper and kind of describing it as a very level-headed approach towards what we've seen as far as some of the ups and downs and speculation in some of the other markets here. One could argue the dollar in a similar situation. Bill Baruch, appreciate you joining us here. Thanks for sharing part of your Wednesday with us. Good to have you back on the show. Bill's the president of Blue Line Futures. Now for a check on some developments.